Assalamualaikum warahmatullahi wabarakatuh. Our group would like to present about contribution Islamic banking to Malaysian economy. First of all, Islamic banking activities in Malaysia started back in 1983 with the establishment of Bank Islam Malaysia or BIMB. In early stage, Islamic banking only provide basic banking service and products such as taking deposit and giving loans without any interest charge. As the industry grows bigger and bigger, various product was being offered to meet the demand from both individual and companies user. Nowadays, Malaysia Islamic banking have become widened and various the service and product by venturing into Islamic insurance or takaful, Islamic broking and taking underwrite activity for sukuk. In broader term, Islamic financial market has become more dynamic and flexible. A comparative between Islamic banking and conventional banking system in Malaysia is Islamic banking is operate based on Sharia law, which levy profit rates instead of interest rates. On the other hand, conventional banking use interest charge to lenders along with other investment to turn over an income such as excessive risk or uncertainty.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Fathini with myself and my check number is 1202388. I will continue the presentation about the contribution of Islam banking in Malaysian economy. For the first contribution of Islamic banking in Malaysian economy is helps to develop financial system in Malaysia. So Islamic banking has helped the financial system in Malaysia based on by creating a system based on Sharia, which is based on Islamic law, which is to protect human welfare. So the obligation to follow the Sharia prohibition is on the riba, which is interest, and borrow, which is extreme uncertainty, and maisi is gambling, in acts as a bull in check and balance mechanism and limit the risk of financial instability in the entire economic and financial system. So since Islam does not allow usually the bank must follow the another way to proceed the transaction. So among the usual alternative is to convert the transaction into a sale or purchase or partner. So the second one is provide many job opportunities. So Islamic banking have provided many job opportunities to more than 6,700 employees in 2008 compared to 4,000 employees in 2004. So even these job opportunities have opened the opportunities in the sector of education to produce professionals in the field of finance. So in fact, the higher education sector plays an important role in supporting the growth of the industry and ensuring the student have complete and relevant skills. So in this regard, some of university have opened, such as like Unitar International University, in collaboration with Amani Group of company, develop a Islamic financial degree program, which under Faculty of Business Technology. That's an example. For the next one point is the next contribution is about the increased investment in economy in Malaysia. So Islamic banking use the concept of real profit and risk sharing, which does not burden any other parties or one of the parties that involved. So for example, Islamic banking have created have term of the mudarabah, which is investment contract, the customer as the investor and the bank is the operator of the share of the profit when making a profit. So while the loss will be borne by the investor. So this coincides with the method of FIC, which means every return is at risk, and this actual profit risk sharing is fair and does not burden any part of the parties. So in contrast to conventional investment that promise a fixed return at the beginning of the contract, and which this investment that do not involve an actual partnership between the parties involved. So the fixed return promised at the beginning of an investment contract is a riba and haram in Islam. So thus Islamic financial institution service the reaction of the economy and needs from investors and savers. The next one is about the relationship of the financial activities and also the economic growth. So there is a causal direction between the financial sector and the growth of the economy. So financial intermediate vital role in the mobilizing a savings, expanding the pool of capital, and that may be invested and made accessible where is the most required in the economic productive side. So in this regard, effort of the developed financial sector are seen in a line with efforts to increase production of a capacity in the economy. So some scholars accept the demand theory, but some of them arguing that the economy expansion funds expansion leads the financial sector to expand. So according to this viewpoint, the faster the growth of the real national income, the greater the demand by enterprise for the external fund, which is the paper savings, and the task of financial intermediation, because a firm will less be able to finance expansion through the internal generation, depreciation allowance, and also the return profit in the most cases. So as a result, the financial system can also assist and maintain leading industry during the economic growth process.
So next, studies on Islamic banking and economic growth. So to know whether the Islamic banking in Malaysia contributes to economic growth, so the studies examine the dynamic interactions between finance and growth using models in which the financial system influences economic growth and economic growth transforms the financial system's operation. So from the research, as you can see in the table above, it shows Granger causality test for Islamic banking and economic growth. Findings reveal that short and long-term relationship. So for the short term, Islamic banking financing does not cause Malaysia economic growth. However, as it is significant at the 1% level predicted by F statistic, there is an indirectional correlation between Islamic bank financing and investment. So as a result, Islamic bank in Granger contributes to development of Malaysia's real economy by increasing fixed investment. However, in the long run, the outcomes are highly promising. The size and significance level of ECMT statistic for Islamic banking and investment indicate that there is a vicious circle of Islamic banking development and investment in long run, as increased Islamic bank financing stimulates an entrepreneurial response in the productive sectors and promote more investment, while more investment in the country facilitates Islamic banking development. So this studies appears to confirm that the demand follow hypothesis, which is financial development follows economic growth in case of GDP.
So next we move to measuring Islamic banks' performance compared to conventional banks' performance. Okay, to evaluate financial performance between these two banks, we use 4 unique material proportion in this examination. Okay, first we use return on equity, return on asset, bank leverage, and earning per share. For return on equity, we use net profit divided by equity. Return of asset, we use net profit divided by total asset. Bank leverage, we use liabilities divided by equity. And earning per share, we use net profit per shareholder divided by total number of shares. Okay, performance analysis between Islamic bank and conventional bank. As the table shows, that the normal return of equity was 6% for Islamic bank and 40% for conventional banks. And the result of the t-test reveals that this higher performance of conventional bank is significant. Besides, both return of asset and equity per share were essentially unique between these two gatherings at P-estimate under 1%, and this outcome implies that the conventional banks perform better compared to Islamic bank in Malaysia. basically for the example banks are picked for this review. And as far as obligation proportion, which estimate the level of liabilities to add up to resources, Islamic bank convey a bigger number of obligation than conventional banks. The danger of this higher obligation is that the bank might be in danger of insolvency and will be unable to pay its commitment on schedule. And the distinction between the normal of obligation of the two gatherings is huge at under 5%, and along this line, not exclusively are Islamic bank presentation substandard compared to conventional banks. However, their obligation proportion is likewise higher.
The Malaysian government itself has its own steps in strengthening the Islamic banking system as a new iconic one for the Malaysian economy. Among the measures for the empowerment of banking institutions in Malaysia are: firstly, Financial Sector Plan 2011 until 2020. In empowering Islamic banking institutions, the Malaysian government has prepared a 10-year financial sector plan, which is 2011 until 2020. Although Malaysia has achieved some major successes in its quest to become an international Islamic financial center, efforts are continuing to improve the ecosystem Islamic finance. This plan provides a more conducive environment to consolidate higher volumes of Islamic financial flows from various market participants to be channeled through innovative Islamic financial instruments. Next is Economic Transformation Program, which is ETP. To further strengthen the Islamic banking institution, various transformation programs are implemented in Malaysia so that each economic unit can contribute significantly to the advancement of Islamic banking. The Economic Transformation Program, which is ETP, implemented by the government has succeeded in making the Islamic banking and finance industry an important sector that has the potential to contribute to additional gross national income, as well as providing employment opportunities to Malaysians themselves by Wawasan 2020. Next is Islamic Financial Service Act 2013. The government of Malaysia also introduced the Islamic Financial Service Act 2013 to replace the previously separate Islamic Finance Acts. The new act, which was enforced on 30 June 2013, is the culmination of Malaysia's efforts to modernize laws regulating the conduct and supervision of Islamic banking and financial institutions in Malaysia. This is to ensure that this law continues to be relevant and effective in maintaining financial stability, supporting inclusive growth in the financial system and the economy, while providing adequate protection for consumers. Lastly is banking system connectivity with non-bank financial institutions, which is NBFI. Other efforts undertaken to strengthen Islamic banking can be made by having close ties with NBFI. Complex activities involving the transformation of liquidity and maturity, excessive leverage, and improper transfer of credit risk are used as systematic sources of risk arising from the connectivity between certain NBFIs and the banking system. NBFI's financial intermediation activities in Malaysia are still not complex, as most of them focus on basic lending activities and investments in ordinary debt and equity securities. NBFI's financial superannuation activities accounted for 107.4% of GDP, and total NBFI assets accounted for 38.4% of the financial system assets at the end of 2013. Of these, assets held in the form of loans and investment in debt securities account for approximately 65.9% of GDP or 16.1% of total assets in the financial system. The level of financial intermediation by NBFI is approximately half the size of the financial superannuation activities carried out by entities regulated by the bank.
In conclusion, the Islamic banking and finance in Malaysia started using the Islamic banking in 1983 to become one of the most progressive and innovative in providing Islamic banking service and products. The development of human capital is seen and essential for Malaysia Islamic financial system to remain competitive and producing more innovative Islamic financial product. The OSM from time to time will evaluate the methodology used in compiling the value added in Islamic banking and Islamic capital market. The DOSM will continue working together with the financial system regulators such as PNM, SC, Bursa Malaysia and Labuan FSA to refine the value added compilation of Islamic banking in Islamic capital market activities. Moving forward, a universal guideline is needed to make the estimate of Islamic financial more comparable among countries.